So let's squash this question once and for all. I get it all the time. I get it in DMs, I get it on Instagram, on YouTube comments, I even get it from friends. Can you actually make money from trading crypto? And for that matter, any other tradable assets like stocks, commodities, Forex? Is it possible? And when I say make money, I also mean consistently, profitably. Can you do it for a living? The answer to the question, can you actually make money from trading, is yes. Good news. You can make money from trading. However, and there is a big however, the caveat is it does take dedication. Contrary to belief of what you may see on Instagram, Twitter, some YouTube channels showing how easy it is, showing Lamborghinis, laptop lifestyle, showing all kinds of things that make you believe that you can instantly make money from trading is not true. It's a real business and takes some learning. So in this video, as someone that has been through it, I've been trading for quite some time. I have a trading educational business here on YouTube. By the way, links in the description down below for Marzell Trading Academy. If you want to learn more, please feel free to do that after this video. But what I'm going to do here is give you my 7 best tips, my best practices, kind of the bread and butter, if you like, to this sandwich, which is trading. I'm going to give you these basics so you can be within the 5%, because 95% of traders are not profitable, and to get into the 5% is not hard. It just takes a little bit of focus, a little bit of dedication, a little bit of education, and that's what I'm going to do with you here. So without any further delay, please give the YouTube algorithm some noise down below by hitting that like, smashing the like button. It really helps. Subscribe for future tips, and of course, price predictions, technical analysis. Without any further delay, guys, let's get into it. So the first thing, one of my best practices for a beginner is simply knowing your trading platform. And some people may be thinking, what do you mean by that? Well, when it comes down to trading, you're not necessarily and not likely just going to be putting spot orders, i.e. buying and selling like on a Coinbase or a Binance kind of platform. Trading is actually using market indicators, using some basic technicals to understand when you should be buying, when you should be selling. So knowing your trading platform, the trading platform that I would recommend to use for those of you that don't know is Bybit. I'm actually partnered with them. I highly trust them, and they're one of the best crypto trading platforms out there where you can trade on leverage. You can do many other things on there as well, like trade altcoins, metaverse. I do have a Bybit for beginners video. I'll put the link in the video description down below. There is also a link to claim your $4,100 bonus with Bybit when you make a deposit. So check Bybit out, and once you know how to use your trading platform correctly, i.e. put in the right kind of order types, should you be using a limit order? Should you be using a conditional order? Should you be using a market order? I teach about all these things, of course, in the Trading Academy, but if you simply watch the Bybit for Beginners video, you'll learn a lot about that stuff there as well. Very important to master what means what, how to use it, when to use it, because this alone can make the difference between being profitable and not being profitable. So I highly advise to learn how to use your trading platform correctly. So the next key fundamental fact that I would say that 95% of traders don't utilize, don't understand, and it's why they fail, is the failure to recognize about correct risk management, correct money management. What do I mean by that? Well, let's say, for example, you have X amount of crypto or USDT or whatever it may be in your trading account, and you simply aren't using the correct ratio of exposure to what you have in your account. So let's say, for example, you had $1,000 in your account. You don't want to be exposing $1,000 per trade because you will get wrecked. And what you do want to be using is, I like to recommend the 5% rule. So for example, if you have $1,000, don't risk more than $50 exposure per trade. That means that you can only lose $50 per trade. And of course, that's just one element to being successful. You also need to know what kind of trade you're doing, when you're entering it, when you're exiting it, what leverage to use, but more about that for the following steps. So the best practice, or tip number 3, if you like, is understanding the basics of technical analysis. Now, this is where some people may be thinking, whoa, I don't understand technical analysis. I don't do all those charts and those lines. Really, guys, the basics of technical analysis is super easy to learn. Again, it's just about a bit of dedication, some investment in your own knowledge. As you know, one of the mottos that I like to adopt for my channel and for the Marzell Trading Academy is an investment in knowledge pays the best interest. I think it was Benjamin Franklin that said that. And you really can, by investing in yourself, make a huge difference. So really important to understand basic technicals. Some of the basic technicals include support and resistance, using trend lines, using basic triangles, using key market indicator levels, for example, like moving averages, using the Fibonacci retracement tools. All of this I teach in the Marzell Trading Academy. Of course, there's a lot of free content out there online as well. But like I said, link in the video description if you want to learn more about what's included in the Trading Academy. So moving on to point number 4, in order to be a profitable trader, that is, of course, understanding leverage, how to use it, what it actually means and when to use it. Margin, leverage, pretty much the same thing. This is what sort of trips up a lot of new traders. Really important to learn what leverage is, how to use it, and how it affects your trade in your portfolio before you start trading, particularly if you start trading on sort of real money, because you can start by just trading demo money. I know on Bybit you can do that using the Bybit testnet. Fifth thing, guys, is to distinguish what kind of trader you are, what kind of person you are in terms of your commitments. Are you going to be a scalp trader looking at the charts all day, taking advantage of the 15 and 30-minute chart? Are you going to be a day trader, look at the hourly and the 4-hour chart? Or are you going to be a position, more of a swing trader, and look for the bottom of the market, look for the top of the market, either go long to make profit or go short and bet on the market going down? This can also be, you can be both. You can be a combination of all or two of them. But ideally, you're going to have a specialty in one of those. And a lot of the time, it's down to the commitments you have as a person, whether you're a family man, whether you're single and you're busy, whether you're at the computer a lot. A lot of these factors come into play. So it is important to distinguish this, because this will depend on the time frames that you're trading and the expectations of risk and reward. Which brings me on to my tip number 6. Best practice is actually the understanding the risk to reward ratios in a trade. What I mean by that is, if you're going long, so you're betting on the price going up, where is your invalidation for your stop loss? Stop losses as well, very important. It's part of managing risk. So if I am betting on the price going to this price, where should the stop be? You don't want to be risking anything less than a sort of a 1 to 3 risk to reward ratio. So risking $1 to make 3. You can lose 2 out of 3 times in that scenario and still be a profitable trader. In fact, quite often I recommend looking at 5 to 1 risk to reward ratios, which means you can still lose 80% of the time and be profitable. So risk to reward ratios are extremely important to master, to understand. Again, talk about this in the Marzell Trading Academy. And the 7th best practice I have for you guys, and a very important one that a lot of people miss out and kind of don't think about before they get into trading, is managing emotions and the psychology of trading. It's super important. How will you act if your trade is up? Will you act greedy? Will you want to go in more? If your trade is down, will you want to close the position prematurely or perhaps add to it to give you a lower cost average? All these things come into the emotions of the fear and the greed that trading has and how it affects our natural human psychology. Again, this is something, you guessed it, that we cover in the Marzell Trading Academy, but something very important I recommend for you to understand and manage whilst becoming a proficient and profitable trader. I hope I provided value. If I did, please share this video in your Telegram groups, on Twitter, on Facebook. I'm on Twitter at Marzell Money. Thanks for joining me. Make sure you're subscribed for future videos. And remember, $4,100 bonus on Bybit down below, and links to the Marzell Trading Academy where you can become a proficient, profitable trader and invest in your trading education. Thanks for joining me. See you on the next one. Take care. Bye-bye.